Nigeria's Apex Bank's latest foreign exchange policy action is already reining in on the once spiraling greenback. But for how long can this be sustained? That's a focus on Business Zone. Welcome. I am Yemisi Lanredo. First off in the news, the dollar edged up from a 2.5-week low against the yen on Monday, but struggled to gain traction elsewhere as investors awaited a speech by this week by U.S. President Donald Trump for clues on his economic agenda. Trump is set to make his first major policy address to the U.S. Congress on Tuesday and is expected to give some details on his planned infrastructure spending and tax reform. But market participants worry that if the plans laid out are too vague or look slow to execute, they could weigh on a dollar that reached 14-year highs earlier this year on the back of the Trumpflation trade, a view that Trump's policies would shore up inflation and growth. And the new Central Bank of Nigeria directive, which absorbed retail forex sales for retail users and reduced the tenor of foreign exchange denominated transaction, has expectedly begun to have a positive effect on the naira and generate interest among operators. Now, the policy also abolished the foreign exchange preferential treatment it accorded the manufacturing sector. Last week, the CBN released $370.8 million to 23 deposit money banks to ease difficulties encountered by Nigerians in obtaining funds for foreign transactions. It also reduced the tenor of its forward sales from the maximum cycle of 180 days to 60 days from the date of transaction. All right, joining me live in the studio to look at this latest development with the CBN's directive is an economist, Henry Boye. Many thanks for your time, all the time, I must say. But let's start with your initial reaction to this policy reversal.
Well, any observer of the Nigerian economy must be by now used to a lot of policy reversals. In fact, in the last 15 to 20 years, let's put it this way, from the time of the return to civil rule in 1999, we've had all kinds of attempts to stabilize the naira value, from the Dutch auction system to the retail Dutch to the wholesale auction, and God knows how many other permutations have been applied so far. But unfortunately, or put it this way, invariably, not one of them has been enduring in terms of success. So the reality, of course, is that there is nothing to show that the current moves, which have been replicated in the past, would also have any long-lasting effect.
Yeah, we're seeing a short-term effect, really. We saw that there's been a slide. We saw the naira at 525 naira to the dollar, and as at today, or as at the closing on Friday, we see that 450, amassing a gain of about 75 naira to the dollar. Now, the CBN has been able to actually do that, but do you think there is any way it could be sustained?
The expectation is that there should be a stronger naira. That is the whole purpose. And plus also there should be a very minimal gap between the official rate and other rates. Apart from the fact that the non-official rates are so multiple that one cannot even say which rate we are talking about. But the important thing is that you are unlikely to get a sustainable positive change in the exchange rate of the naira, so long as the fundamental pushing the naira rate have not been addressed. What are these fundamentals? Everybody will say demand and supply. In other words, if CBN reduces the volume of sales that he puts on the market from what happened last week, you would again find the naira rate being spiked much beyond the 500 naira to a dollar. If, on the other hand, the CBN recognizes that the issue is not that of the quantum of dollars that are being offered, but in truth, in real truth, it is the issue of confidence in holding the Naira, okay? The Naira has, in the last few years, lost a lot of credibility, and people don't have much confidence in holding Naira. For example, most of the people who may have been shoring up their dollar account are not doing so because they love the dollar so much. They just want to be certain that at any one time, the value of their money would remain stable, because they now recognize that if they held their money, they continue to hold their money in Naira terms, further devaluations cannot be eliminated. So consequently, it makes more sense, because the purpose of holding any money is that you must be able to recognize that the money, the currency in question, is a good store of value, okay? If the Naira fails to be a good store of value, people would shy away from it and hold other currencies. Not because they want to trade with the other currencies, but just because they want to hold on to the dollar, which appears to be more stable, not even relatively, widely more stable than your Naira. So it is not just the trading requirements that are critical here. Until you restore confidence of Nigerians and traders and all of them on the strength of the Naira, on the stability of the Naira, you are going to continue to have this kind of ad hoc hiccup kind of arrangements in order to show up the value.
So you think that with this positive move, with this directive, this short-term gain, the confidence won't be restored? It's just going to be for a short term?
Well, as I say, until the fundamental causes have been identified and attacked, and I keep saying that it is not the quantum of dollars that is so much the problem as popularly expected, as much as the quantum of Naira that is always chasing the dollar. Because you have a situation where 50% of banking profits, of profits of banks at the moment, certainly they're not made from industries which are comatose and struggling to. So they make a lot of money from borrowing, from lending money to government, and also selling dollars. For example, in the area of treasury bills, the banks make, probably this year, they'll probably make anything from 500 billion to 600 billion Naira for doing absolutely nothing. For warehousing government funds within the system. So by that same token, it means that if you want to look at the fundamental cause of the Naira continuously depreciating, you must not fail to recognize the quantum of Naira that is available to chase the Naira, to chase the dollar at any one time. And you, as a journalist, you are certainly conversant that CBN has a problem with managing the liquidity surplus in the country. In other words, our problem, or the problem of challenging CBN's mandate of controlling price stability, that is keeping prices as low as 2% or 3%, certainly not 18–20% as the case may be. CBN's mandate to be able to manage price stability has been very much challenged by the fact that there is surplus Naira. So you can imagine if the surplus Naira available compels the CBN to borrow money that it doesn't need, but only money that it needs to take out of the system and pay as high as 15 to 18% for it, it would be totally inapplicable for you to expect that the real sector will get any serious attention.
Yeah, Mr. Boyo, one actually wonders when the dollar would actually chase the Naira. Looking at, well, I read your comment in one of the dailies today where you talked about the unresolved burdens of 5 rates of Naira to the dollar. And I wonder what the CBN is actually doing with these 5 different rates without a, it's a multiple market rate, but we'll look at that after the break. And of course, looking at the initial policy where the CBN actually gave that preferential treatment for the manufacturing sector with the 60% of FX at the interbank market, but that will be after the break. Do stay with us on Business Zone. It's Business Zone on TVC News with me, Yemisi Landry Ido. We're looking at the effect of the new forex policy by the Central Bank of Nigeria. I've been speaking with economist Henry Boyu. Many thanks for staying tuned with me here on Business Zone. All right, before we went on that break, I was saying we're going to be looking at your comment in one of the dailies where you talked about the unresolved burdens of 5 rates of Naira to the dollar. And while we're on the break, you told me that, okay, even this report was about it since 2005.
Yeah,
now we have even more than that. Can you talk
Absolutely.
to us about that?
In 2005, when the article you're referring to was first published, the article was repeated in the Punch newspapers and also the Vanguard newspapers this week, today for them, as a matter of fact. And at that time, in 2005, there were 5 different rates. The rate at which the CBN changes the dollar. There was also, I think, a fuel rate. And there was then the black market rate, the parallel market rate. And there were about 5 rates in addition to the black market rate, making 6. So you can imagine, what's it, 11 years down the line, we're not even talking of 5 different rates or 6 different rates now. There are almost 11 or 12 different rates, all different in terms of the difference in percentage over and above the actual so-called CBN rate. And these include, now we have a new distinction for travel, for education, for health, health tourism. We also have
business,
one for business travel. We also have different rates for the MoneyGram and what have you, the transfers, money transfers. They also have a different rate. And you also have the black market rate. The usual expectation is that even if there were going to be deviations from the official rate, it really should never be more than maybe 2, 3, maximum 5%. But we now have deviations as high as 20%, which are acceptable to CBN. CBN, for example, is saying for education and I think for health, the rate would be about 20% over and above.
I mean, how did we get here? Did we at any point in time have a single market rate?
We did when the Naira was much stronger. Indeed, when the Naira was much stronger, and Naira was about 60 kobo to $1, you found that it made no sense for you to go to the black market to change your dollars if you had some, because the black market rate was cheaper than the official rate. I don't know if that makes, you know, in other words, not now like you take your $100, you go to the market and you're looking for 500 or 450 as the case may be, okay? Much higher than the official rate of 305 or whatever it was, or whatever it is at the moment. At that time, if your official rate was 305 and you had a $100 bill and you went into the market, you will not get 305, you probably get 285 or something like that. So it was cheaper in the black market than in the official rate, on the official market. So consequently, you come back to square one. That is what drives the exchange rate of the Naira. Certainly, it's not the quantum of dollars that you earn, as a lot of people have tried to make you believe, because when you look back at the time that the dollar was, the price of crude oil was in excess of $150 per barrel, and we were also producing over 2.2 million barrels, because when you look back at the time that the dollar was, the price of crude oil was in excess of $150 per barrel, and we were also producing over 2.2 million barrels per day, and we had very healthy reserves, best ever reserves for that matter, $60 billion worth of reserves, or even above. And then you found that despite all those fortuitous income that came in as a result of a higher crude oil price, what happened? The Naira remained at 155, 153, 155, you know. But then, the moment the price of crude oil fell and the output also fell, what happened? The thing crashed not only by 5% or 10%, it came really, really crashing down. So the reality, of course, as I've always maintained for the past 15 years, that the issue is not the quantum of dollars that you earn. The issue, the problem in the market is the evident suffocation of the system with excess Naira. In other words, if you imagine, let me see, that you have a money market with only 2 currencies, Naira and dollar. And for each Naira, each $1 that you have 1,000 Naira. You'll find that the rate of exchange in that market would be 1,000 Naira to $1. But if on the other hand, you now say, it is a question of more dollars, and you push in more dollars into the market, instead of $1, you put $10 in the market, you would expect the naira to fall, to be stronger. But what happens if you now put $10 in the market and then you now have 20,000 naira in the market, you still have a weaker naira, even though you have more dollars in your hand. So I think I don't know how to impress this on our people, because this is the reality. It is not the quantum of dollars that you earn that determines the exchange rate of the naira. It is the surplus naira liquidity that is an embarrassment to central bank, that makes it necessary, compel CBN to do something that a rational person would not do. You would not go and borrow money from the market only to sterilize it because you think that, oh, this is too much in the system, and if it's not taken out, we will be driving inflation much higher than 18%.
All right, let's look at the foreign reserves now, which we see that is increasing lately. And of course, it's still basking in the success of the oversubscribed $1 billion Eurobond.
Yeah, Missy, don't fool yourself with that $1 billion Eurobond. It's not basking in any glory. That is just a distraction. The $1 billion Eurobond has not affected your naira rate at all. What has affected your naira rate and seems to have stimulated it, instigated a little bit minimal stronger naira, is that you have more dollars being supplied.
So we shouldn't have gone ahead, or the acting president is already making another request of a $5 billion euro bond.
Let me ask you a good question. You are hungry for loans, okay? Your total reserve base is about $30 billion or whatever. You place the $30 billion in JP Morgan and places like that to hold for you, and they probably pay you maybe 1% or 2% at the end of the year. Okay? Now you want to borrow $1 billion. Well, the people who are keeping your $30 billion are the same people who are going to get investors. So who is the fool? You're sitting down there with $30 billion, and somebody's going to say, look, why don't you come and take this from 3%? It's part of Nigeria's funds. Take it to 3% from me, okay, and go lend it to the Nigerian government at 7%. So basically, we'll be borrowing back our own money. That's the height of folly. And unfortunately, this has been consistently the case for so many years. You cannot be saying that, oh, I have $30 billion worth of reserves, but let's keep that aside and let's use that to only fight and defend the naira. And you have been doing that for over God knows how many years, and yet you have failed. And you said, don't let's touch that, but it's good enough for us to go borrow another $1 billion where we are going to. Please, I don't know, does this make much sense to you? Because I really want to be educated, so I don't feel that I'm the only one.
Well, maybe if the government is actually borrowing, it would help our real sector, which we have been talking about, because it seems the real sector is still suffering. And looking at them abolishing the treatment given to the real sector now at the moment, although they still say, oh, it's still at our topmost priority. So
look, let me go back again and say, you don't expect $1 billion to do much to the real sector, okay? Not at a time when you have a situation where the cost of funds also is in excess of 25% or something like that, okay? So your $1 billion is like a drop in the ocean. But I want you to...
the need for the 500 million.
Yes, I want you to understand this very well. Okay. Does it make sense for you to borrow $1 billion when you have $30 billion? And your own $30 billion...
Your reserve...
is supposed to be earning maybe 2% or something percent. Then you say, leave that in the hands of the same people you are going to borrow $1 billion. I mean, look, I think we have to seriously confront this, because this is the reality. If you are asking
that it should shelve this move, so what move really do you think?
The reality is that it is not so much government spending that will take us out of the woods, okay?
So what will take us out of it?
Yeah, exactly. For example, the total spending for 2017 is even challenged. 7 trillion naira or 7.something trillion naira, thereabouts. You know, how much is that? $35 billion, you know, almost. You know, what am I talking about? 3 times 7, $21 billion. Okay. Meanwhile, for power alone, for adequate power, it's speculated that you need at least $100 billion. So if you put your whole $21 billion in power, you still won't be self-sufficient in power. So the reality, of course, is that the real driver of the economy is supposed to be the real sector. They are supposed to be supported by the commercial banks, who have been given a mandate by central bank to liberally create money. The banks have a mandate to create money. They have the capacity to create money. But this money that they have been mandated to create are being used primarily in three main sectors. One, to buy treasury bills, okay, to buy government treasury bills, about 30% of that. Another 30% is lent to people who are bringing in fuel.
What's left
the
for
balance
the manufacturers?
30%. Thank you. What is left for the manufacturers? Precisely. Okay. Plus also, no serious-minded manufacturer would be ever interested in going to borrow at 25% to do a long gestation project.
Okay, so your one sentence, what is the right mode?
What is the right mode is what I'm telling you. The real sector should be driving the economy, but the real sector would never be able to do that so long as excess liquidity remains a problem, because excess liquidity drives inflation, it drives higher cost of funds, and it also drives a weaker exchange rate. So until you eliminate or minimize the need to do a silly thing like borrowing money you don't need, and this year alone, the first 5 weeks of this year, the central bank has already borrowed over 1 trillion naira that it would pay between 15 and 18% interest to the banks. Look, let's take this very seriously, because this is the bottom of our, this is the kernel of our problems.
Yes. Thank you very much, Henry Boyo.
It's a pleasure, Yemisi.
Unfortunately, we don't have much more time to talk about this, but I'm sure next time you'll be here again to trash these issues. Many thanks. All right, markets across Africa recorded positive trades on Monday. The market in Nairobi, there it returned of many retail investors to the market fueled growth in trade volumes. The Oil Share Index moved up by 0.34%. In Tunisia, stock trading closed positively. The desire by the government to energize the economy with heavy infrastructure investment holds prospects for job creation. The market in Ghana also closed in green after investors staked heavily in equities. The trade in insurance, banking and agriculture stocks boosted the market. And the market in Ghana has been fairly stable since the peaceful transition of political power. And of course, the Nigerian market also closed strong. Recovery activities are currently taking place in many market sectors, and the market has recorded about 4 listings in the year, with more showing interest to come into the trading floor. Now, crude oil prices stayed mixed in the global market as dealers study supply lines. And with those figures, it's a wrap on Business Zone for today. Many thanks for watching. I am Yemisi Lanre Ido. I leave you with the figures of the exchange rate as it stands at the moment.